Hello, kindness. Are you wearing your diamond mittens? We're going to go through some juicy pieces of information today. I love keeping you friendlier, wiser, and informed. Recently, crypto Twitter user Gainzy ceased his sponsorship with the online casino Rollbit. Now, this was quite a while ago, but now it's been enough time. I want to explain a few things for you, friends. All right, so a lot of influencers on Twitter and YouTube, they will go and get sponsors. Sometimes they're good, sometimes they're bad. I believe it's a healthy approach to assume they're all bad. This is just me, and I'd like to be challenged on this. I haven't heard a single person in my life ever come up, right? So where someone comes up to me and says, I heard about this amazing sponsorship that an influencer got. I signed up and I made millions of dollars and it changed my life for the better. I've never heard that. Not once. You'd think at least there's one person out there. No. It's always, I signed up, I got destroyed, I put in more money, I got destroyed again. How do I get out of this? Everyone's going to kill me when they find out. It is a sad story like that. In crypto, we try to remove the middlemen. So, everybody's free to choose whatever they do, okay? We can't go around policing everybody. I'm here to just inform you as your friend who tells you to like, subscribe, press the belly button and all, and tell you to shock that algorithm, friends. You got to take this seriously. BitBoy, Ben Armstrong, friend of the channel, very friendly with the channel, friendly with Pulsechain, friendly with Hex, friendly with Richard Hart, friendly with me. He was getting $1 million a month from Stake. Stake infiltrated the BitBoy channel. I'll be honest, it got a bit annoying. You're watching the show and I'm not kidding. You know how long the intros were, friends? 3 minutes. Do you know, it was 180 seconds of just these drums and these beats. And it was just the word stake, 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 stake. Crazy, man. You're not allowed to say stake.com. You get flagged. You get flagged for gambling and stuff. So Gainzy's moving on to a casino. Please be careful with these, friends. You're going to see a lot of tricks. So I'm trying to prepare you for the bull market. What happens is, what they do is, okay, please learn this for your friends and your family, all right? So when me and you trade, let's say you go sign up on Bybit, all right? And they have a fee. There's 0.1% fee up and down, okay? Whether you buy or whether you sell, okay? Yeah, there's a fee. So they take it from you, take it from the pie. But what Rollbit do is they say, hey, there's actually no fee. But if you win, we're going to take a tax out of it. All right? So you only pay the fee from your wins. It doesn't change anything. It just kind of skews where it's coming from, but everybody still gets destroyed. There's no mathematical formula. You can't reroute the fee anywhere because at the end of the day, fundamentally, it comes down to the fact that most people are just coin flips. They're worse than a coin flip, especially when it comes to markets. So Rollbit started off on Solana. Rollbit has a successful coin. This is Rollbit on Solana chain. And I know there's a lot of wicks here because they actually moved off. So you're going to have to ignore these. But this is what the chart did for a long, long time. All of 2023. It was just here at 2 cents and then just started popping off. A lot of people came and started gambling. I mean, it's fascinating how these works. You would think that this big move would have happened in April. Why? Well, peppy. Bitcoin went up. Balaji's talking about $1 million Bitcoin. You're like, this is the time for gambling. Nothing happened. It went sideways. It was only until June to July of this year that it started moonshotting. See, the mind of the market. That's why I'm telling you, Warren Buffett's principles are right. Don't try to time anything. You have to think long term. I don't care how red the candles are. These people out there who say otherwise, they're a bunch of copers. They don't care about you. They care about themselves. I care about you. I'm not making any money off you. I don't charge you for a single thing. Just press like, subscribe, press the belly button and all. I appreciate every single one of you. I'm here to tell you, I always say this, you can learn the easy way or the hard way. All right, there are plenty of dead bodies out there of people who wish they just took the easy route. You have to take a long-term view. Trying to muck around with the season's going up and this month and that month, you're going to get wrecked. Even with me and all my experience, you still see I have a super humble approach to the markets. I know every green candle can become red tomorrow. I've lost count how many times I've woken up, green candle becomes red, and then we've reversed ourselves into a 3-month bear, and everybody's lost their mind. So even though Gainzy making a lot of money, be careful. I'm telling you, be careful. Don't do it. All right. I can sit here and tell you, not financial advice. No, actually, don't do it. Literally, don't do it. You're going to get wrecked. All right. You're going to get wrecked. How many rich gamblers do you know there are? Well, you know, the whole crypto industry. But who else? Huh? Who else? It's funny. It's funny. Okay. $1 million. There's a lot of controversy. Let them do what they do. You know, he's had to go. Mr. Murphy has reported that he's deleted his posts from the past. So these sponsorships, they're people getting paid, man. They're getting paid in the background. Look, I can't verify Gainzy's deal myself, but I'm just telling you, let's pretend it was anybody else. Let's just say it was some random dude on another chain, another coin, you've never heard of him. Most likely, most of the time, you'd say, well, the exchange gives them money, fake credits on the website, and then they gamble. So when they win, they can't withdraw, but you don't know that. Why do they do that? It's so they market to people like, wow, I'm making so much money. I made like 50 grand, made 30 grand, 20 grand. But they know they can't actually withdraw. But the exchange tells them, please communicate to everybody that it's real and show them the screenshots. But they're getting paid on the side to do that. Okay. This is, by the way, very illegal in America to do that. Because see, the government knows. The casinos, they know. They go, this is the oldest trick in the book. So, but I'm not saying they do it. I don't have verifiable on-chain stuff. Maybe there is positive stuff out there. I'm just telling you, err on the side of caution. Just assume it's all fake. I don't care how real it is. Still assume it's fake. You remember what happened to FTX? Destroyed the whole crypto industry. Imagine you had the approach of, oh, assume everything is correct. No. What did we always tell you? We always told you, 1, keep your back straight. 2, keep your fluffy slippers on. And 3, always assume middlemen exchanges are never going to give you your keys. You got to be safe. And a lot of people are under a lot of pressure. It takes a lot of effort to keep your back straight, literally all day and all night. Please prepare your pointy elbows for this one. The goal of investing. See, it's not to avoid a decline in your portfolio, quote. Shocking to everybody. I thought it was to avoid that. No, it's not that goal, okay? That's volatility. That's the price you pay for having opportunity, because there's a ratio of people who understand the future and then who let their emotions overrun them. And so the larger the disconnect between them, the larger the price fluctuations, which also means the larger the opportunity. So if you want opportunity, you get big volatility. That's it. You can't have one without the other. So your goal is not to avoid the biggest price quote drop. The only reason we get paid in these risk assets is precisely because of their inherent risk and liquidity shocks. That's why we actually get paid. Have you heard of a little coin called Bitcoin? I know you have. Don't lie to me. I know you've heard of a little coin called Bitcoin. Why did it go up so much? Metcalfe's law. Why? People joined the network. Okay, let's go further. Why did they join the network? Because liquidity was being injected. Okay, why was liquidity being injected? Because people knew the fiat Ponzi system was eventually going to come to an end. They started allocating money, and surprise, surprise, the money kept going up. There was also Bitcoin halvening to help be the catalyst for this. But you didn't really need it. If the Bitcoin halvening was never there and it was just a constant function, you'd still get to the same price over time. Might have a bit of a different chart pattern, but you get the same price over time. This is why it happened. And so you only got paid for being early in Bitcoin, the liquidity shocks, because you're early to the game. It's a shock to the system that so many people are coming in as a ratio of the existing people. Because remember, at the start, you only had like 1,000 people. Right, you actually had one, Hal Finney pretty much, or whoever it was. Then you got to 1,000 people, then you had to 1 million people. Now, Bitcoin has 219 million people holding, including Coinbase, Binance, right? It's 89 million on chain. The exchanges have a lot. 219 million. So if 20 million people want to buy Bitcoin, there's no shock anymore. You're just boosting it up by 10%. But in, say, for example, a coin like Hex with 200,000 holders in the system, yes, adding 1 million people is an enormous shock. A 5x, 400%, bang. You see the difference. You know the difference. The goal is to hold out for compounding gains. That's actually our goal, to hold out for them. The longer we hold, the higher the probability that we are capturing the upside of the positive liquidity shocks. The longer we hold. And guess what? The liquidity shocks always overwhelm the negative ones. Why? Because they keep debasing the currency. And we keep getting 1% smarter every year. And GDP keeps growing with the population. Right? Longer horizons win. I'm going to explain this a bit further, friends. But first, you got to enjoy this cute little Peppy in a suit that I put together for you riding an emu. This is magical. This is friendly. Just some chick, who is my friend, lovely lady, saying, this may sound stupid. No, it doesn't. There are no stupid questions. Everybody is welcome here. Why are our gains compounding? Is it because of Metcalfe's law? That's all I can think of. Very good question. I explained here. So there's actually two main reasons. You are correct. It basically is Metcalfe's law because it means the same thing. Because remember, Metcalfe's law just means more people come in, we get bigger gains. But look at this, okay? When a population grows, it's a percentage of the previous year. All right, so there's 7 million people on Earth. Okay, if we grow at 3%, right? 3% of 7 billion people, what? 210 million people. Okay, so we're not having, say, 210 million babies. We're having 3% of that 7 billion. And then eventually it's going to be 3% of 10 billion, which is 300 million babies coming in. That's the first one. And with that, obviously comes more currency units because more people are coming in, right? So that's the real reason, friends. So what I'm doing is I'm kind of justifying the government of why they print. So because there's more people coming into the system, they've got to print more currency units. Number two, when they print money, it's a percentage from the previous year. They print currency based on the existing money supply. So how much do they print? They print about 5% every year. Some years it's 7, some years it's 8, some years it's 2 or 1. The average is 5% per year. That's right. The real inflation is about 5% per year. So if you're not getting 5%, you're getting destroyed. It won't show up in goods and services necessarily every year, but just know that the insider, the bug eaters, the people who are part of Citybug, JP Mosquito, Goldman Slugs, Bank of Ants, them and their cronies who are employing the corrupt SEC in the backgrounds, they get first dibs on that money supply. They go and spend it in their own ways. Yes, some of it is laundering through military, Middle East, whatever. It doesn't all make it to the price of bananas. But just know that's how much they print. Where does it all go? In the shadows, right? 5%. That's the hurdle rate. That's the real hurdle rate. You got to beat 5%. So that's why they're always printing that. And then we're going to read this together. As the GDP grows, they need to accommodate for a larger number. There's 1% every year. Like every year, we get 1% more efficient. We're spending 1% more money. The capacities, 1% more. Distribution centers, it's about 1%. That's about the growth every year. Real number. And just to give you an example, right? In 2008, the big stimulus was $700 billion for TARP, Troubled Asset Relief Program. Now, we have to do 4 trillion in the zombie virus. Next one, probably 10 trillion. See how the numbers just kept getting exponentially bigger? But, you know, it is what it is. And that's why you're going to enjoy these cute peppies playing in a nice pool of leaves. Make sure you like, subscribe, bell button all. Tell mum and dad we do love and appreciate them. We'll always cherish them forever. Catch you in the next one.